Good morning, everyone. It is February 1st. We have already completed 1 month of the new year. So we have 11 months to get our goals, 11 months of grinding to go. And let's hop right into it. Friday was one of those days where we will be talking about forever. If you have been in the metals, you have been enjoying the luxurious ride up of silver and gold. And on Friday, if you overheld your position, you are staring at some significant losses, probably erase your whole move up here. On class on Wednesday, we gave our students a heads up that we were way too extended here on the weekly and to lock in profits or stay away from silver until there was some type of retracement. Little did we know we can trace the entire move for one of the worst days ever in silver and also in gold here. As you can see, these were generational shorts with massive volumes, and it was spiked because of the news that we got on Friday, which was the new Fed chairman pick of Kevin Warsh. I think it is a little bit of overreaction. A lot of people are pulling up his old clips where he has been an inflation hawk, not have been in favor of quantitative easing. And I think people are really not understanding that his position has changed a lot. And if you watch some of the more recent interviews, he has become more friendly to the conversations of lower interest rates and allow AI and growth of the economy to happen naturally, and that inflation will moderate over time due to those enhancements in productivity. So I've posted a lot of updated links to Kevin Schwartz's updated viewpoints on the economy. Suggest you go to my Twitter account and check some of those videos out and know that these are more than likely going to be buying opportunities once we get through all of the headwinds. We're currently in a partial government shutdown. Hopefully, we'll get the votes to reopen the government quickly so we can avoid last year's debacle. But we also have some big earnings reports that are coming up this week. So let's go ahead and get into that as well. So first on the board tomorrow morning for open, we have Disney. I haven't traded Disney in a long time, but we're going to look at the daily here. And on the daily, you can see that we have been catching support here at the 200. We have a couple of strong candles here that have been holding this level. And it kind of looks good on the daily here. If we come out, we have a possible inverted head and shoulders here that's bouncing off of the 38.2 of the most recent move. Came down to the 50% retracement, bounced right back up and rejected at the 23.6 and now holding this daily 200. So if earning comes in nice, I could see that we make a move back up. We would need to see park sales, holiday cruise line sales. We would need to see what their future guidance is. We will see if they add any color around Disney Plus subscriptions. But if those come in well, you can see a move back to 115. If those numbers come in soft, then you can see a move back down to the 100 psych level here, and further down possibly. So if I were playing Disney earnings, I most likely would sit in some 100 and $15 calls with some 100 to $95 puts from the downside here to protect myself from any unexpected guidance mishaps or hiccups on the conference call as well. So this is how I would play Disney. The daily chart looks okay, but it's not my favorite earnings this week. But I know a lot of people like to play Disney, so we will make sure we have it charted here. Next up, we have a fan favorite, a retail favorite, PLTR, Plantier. We have a very charismatic CEO. For those who have been following this or been in this stock since the beginning, it's been an incredible run up for you. You've enjoyed a lot of gains. If you got down here, even what 2024, down under $20, you've had a sensational run. Their earnings should be good in my opinion. I think this is worth actually taking a position in ahead of earnings, just because it's sold off a lot from its all-time high, and it's hovering right below the daily 200 here. If we go out to the weekly, we can see some even better price action that is coming back down to the 50 here on the weekly, and it's at the midpoint of the RSI as well. So I kind of like it here going into earnings because the catalytic event is sitting right at what my seesaw would play out for this event. So if you wanted to take a most recent swing high to swing low, you would come in here, you would take this green candle, go up to the most recent high, and you'll see you have some price levels here to kind of play around with. So right now it's holding its 50 at 146. And it can see some downside here to 120, and it can see some upside here to 170. So this actually is a really good candidate for my seesaw method, as it's right in between two critical pivot points. I will have to go in and check and see what the IVs are like for the earnings because I'm sure with PLTR, the IVs are pretty high. So depending on what those are, you can move out to like March 20th or February 20th. I wouldn't play weeklies because it doesn't move with side or outside of the implied move. You can get crushed on both sides. So I would play it safe here. I would probably go 120 puts with some 160 calls to the upside. And I would do both strikes for March 20th, especially for the call side. I would do March 20th. You can probably get away with some February 20th puts to the downside if you wanted to hedge going into earnings. But I like it. I like PLTR here on the chart. We've had a lot of movement when it comes to government contracts and geopolitical tensions in Iran, et cetera, et cetera. So I'm assuming they're going to give a positive and robust outlook. And it sold off a lot into earnings here. So you can see from 207 down to 150. That's a nice haircut. Sets up for earnings to be either a catalyst to go back up or to continue into the downside. So I actually like PLTR here into earnings. I think it's worth a shot. Next, we have PayPal. PayPal, for those who haven't been trading, PayPal has been stuck in misery for quite some time. It's been hovering underneath the weekly 200 for a couple of years now, to be honest, since 2022, and it can't seem to get over it. I'm not sure what catalyst will take it over it, but I like where it's setting up into earnings, a potential triple bottom here, or you can call it a double bottom, or you can call it a head and shoulders if you are bearish on it here. You have your left shoulder, your head, and your right shoulder setting up, which could drill us right down into this support here at 50. So for those who aren't listening to the audio, let me see if I can recreate it for you here. So you have your right shoulder, you have uh your head here, and then you have your left shoulder here, right? So you have this head and shoulders playing out. And you also have a little wedge playing out here on this time frame right here, right? So what we could do is come down here and test 50 into earnings. And then if the earnings are okay, because where it's at an RSI as well, right here below 30, maybe some type of positive guidance, maybe, I don't know, if it's exposed to crypto, is their bottom line might not be that well. But if they can get some support and have it come in and provide some guidance to the upside, then you're looking at potentially 65, 70 off of earnings or below 50. So I would stay between 65 to 60. Wouldn't go really higher than that on calls. You can look at February 20th, March 20th. I wouldn't spend too much capital on PayPal. It doesn't really perform really well. But for those who are in the stock, those are the levels I would be watching. Now, I don't trade this stock a lot, but it gets a lot of really good movement, especially around earnings, and it's setting up pretty nice here on the weekly. As you can see, I have pointed out here an inverted head and shoulders. It's had a nice consolidation here between the EMAs on the weekly and a very strong weekly candle, despite all the carnage that we saw Friday. It's closed really well on the weekly. So I would keep PepsiCo on watch to see exactly how this would perform. Might be a better share play. I don't think a lot of people play their options contracts. So the option contract probably has a super low volume liquidity, so you probably get stuck in there if it doesn't move the way you want it to move. So I would more so play this from a share perspective, but I like it on the chart. I like where it's at on the chart here. Just put in some quick fits for you to kind of see where it's at level wise. So yes, it's right here at the 50. You can see 158, 160. If you want to put in a tighter fib and create your cluster, you can go to the most recent sell-off. So you kind of take this one here to here, and then it gives you some better levels of kind of midterm strikes where it can go to and where it's currently rejecting, which is right here at the 618 at 153.76. So you see what this candle is right here. This is where it's currently rejecting. And that makes sense because that is the 618, right? So when you come in here and you draw your fibs, you kind of understand where the resistance and support levels are and why candles are reacting to it. So if we can get through this block here, the 618, it could probably try to go touch 160. If the earnings aren't well, the guidance is not what we like it to do. Suggested it comes right back into this channel and holds this 23 here, 135, 140, and then kind of trade sideways as well. So Pepsi would definitely one to keep an eye on. Um, we also have Merck and Pfizer. I'm going to save those two for later because this month we have 23 healthcare companies reporting. So it's a big month for healthcare, and I'm going to do all healthcare at once in a separate video. So let's keep moving to AMD. AMD is a crowd, a crowd, I don't know, depending on what side you're on, it could be a crowd pleaser or an event money destroyer for those who are familiar with the acronym. But it's coming into a weekly chart with a lot of gaps to the upside, and quite frankly, it looks really concerning to me. This could be a possible M forming where we could see guidance not provide what it needs to provide. It can come down here and all the way back down to the 200. Now, as a NVIDIA believer, I need AMD to report well because usually if AMD reports well, it reads through to the rest of the chip sector and NVIDIA has a nice little pump into earnings, right? But there's some very obvious gaps here that we need to pay attention to on the chart, and you have these gaps right here into a support zone, right? So you have these gaps on your chart right here. They're set around 180 to what is this, 165-ish? Okay. So this is right here off the bat. This is your downward support. If you were to play this into a put side, you would look for these 180 puts far out the money, yes, but if the earnings are bad, trust me, that gap will fill. As we can see what happened with Microsoft, don't even have to point that out, but gaps can fill and they can fill fast if the earnings doesn't justify the means. So let's go back to where we had that I believe this was Liberation Day. So we have some price data here to work with. And then we can go all the way up to the all-time high. And you see where support is, right? Right here at the 38.2. So 38.2 is a bullish retracement, and it's come down and retested this twice. Double bottom off the 38.2, and then revisited the all-time highs, double topped. And last week's weekly candle was not reassuring going into earnings. So if you have the capital to spend on AMD and you want to go a little bit tighter on your ranges, I would do 220 puts for February's 20th. And then I would come in here to give you some price ranges to consider to the upside. You would take this range because this is some nice data here that's hit repeatedly. And now this will give you some upside price targets to keep in mind here on the chart. Now, will the upside come? I don't know. They would have to really report some really good earnings here. But it's right back here at the 618. It closed a little bit below it, right at the 50 here on the weekly. So if you want to do 220 puts to the downside with say 260, 250 calls to the upside, that would be a solid spread to play as well. I would probably keep it neutral or not play it at all because these companies, especially semiconductors, can beat on earnings, but they can miss on guidance or not as high on guidance as the street wants, and they sell off regardless of strong growth. So just keep in mind when you're playing that, if you're playing AMD, don't over leverage yourself because we also do have SMCI that reports on the very same day as AMD. And SMCI is one of the biggest customers of NVIDIA. And you can see here on the chart, it's had some very wild price actions and inflections here. So we've had, let me just clean this up a little bit so you guys can see exactly what I'm talking about. So you see here on the chart, there's a lot of different areas and zones, and if you're wondering what these light beams are, this is a new algorithm I'm playing with on Webull. I'm tailoring it a little bit. It's set to mirror how I like to trade. So it has like indications on Momo. So for instance, the MACD, the 200 crosses or the 50, it gives me go long or go short notifications. And so far, it's been pretty accurate. And you can see when the green comes, it's new or highs. When the red comes, it's some nice lows. So still fine tuning it, but that's what you're seeing on my chart here. Once I do kind of get it out to what I want, then I'll share that algo with you guys to mirror on your Webull chart. Completely free, by the way, too. Didn't have to pay for it. But anyways, so on the weekly, SMCI has been kind of trending sideways. It'll pop over it, it'll come back down to it, it'll go underneath it, it'll come back up to it. So this 200 has been kind of acting as a guide on the weekly. So right now, if we just zoom in on the most recent price action, if this current low can hold as a low, then we can kind of put in some price here and see that we can have some upward actions towards 50, 45, 50. But if we do break below this threshold here, then you would probably look for that low candle that we had, which was back at 17. Ooh, that's tough. So I don't want to see that just because I'm bullish on semis in whole. But if you wanted to do $20 puts with say $40 calls on SMCI, that is how I would play SMCI. Probably more beneficial just to buy shares. It's under $30, so it would make sense just to buy shares and either take your profits if it pops or cut your losses quick if it sells after hours. But it needs to get out of this trend between 20 and 60, basically. It's been trading sideways now for almost a year, right? Well, not a year, but maybe the last 4 or 5 months. So then we'll see what the catalyst is, what the earnings, the guidance is, but it needs to be out of this range. I think SMCI is probably a better play if you are buying shares. Now, one of my favorites, or it was my favorite until recently, is Chipotle. So I think they're going to have a really good quarter. I've been liking what they have been doing as far as their campaign switch to providing more GLP-1 offerings. And it looks like they've stopped skimping out on the portion sizes on chicken as well. And it's been causing some positive responses from consumers. So I like to see their same store sales go up. I like to see their foot traffic inside the stores on the report go up. And I like to see here that it's in a defined uptrend versus when it was in a defined downtrend to kind of give you a little what detail what I'm talking about there. So for here, the last couple of months, we've been in this defined downtrend, right, on the stock. So, and we finally broke out of that downtrend, the falling wedge, and now we're putting in a defined uptrend. So I would like to see earnings continue this uptrend in the reversal, right? Obviously, we have the weekly 200 and the weekly 50 um, threatening a death cross here. So I would like earnings to negate this and pop back over what 43, 45. And hopefully we can see a retest of 50, right? So you have your fibs there to this exhaustion candle here, and your 50 and 200 and 50% fibs has a cluster right here. So this is a very pivotal point when it comes to resistance. And if it can get over this resistance, then Chipotle would be in good shape. So this is a very key area. So you want to go right at the money for playing calls. Leaps are very cheap on Chipotle. So you want to go $50 leaps or $40 leaps. You could probably do that. And then you can probably protect your downside with some $35, $40 puts for cheap. Or you can just play shares, right? Buy you 100 shares and live with what happens on the earnings call. But from a pure chart perspective, there's some very key levels here that we want to see hold going into the print on Tuesday after hours. So, but I like Chipotle long term. I think Chipotle long term is a company you stock up on shares and then or leaps and come back in 6 or 8 months and be happy that you did so. So that's Tuesday. And then on Wednesday, we have Uber. Uber has been in the news a lot lately because of Tesla's advancements in robo-taxis and how they are now fully autonomous with no assistant driving. So Uber's going to have to do some shaking and some deal making to stay relevant to hopefully maybe get them a fleet of Teslas. I know they have a lot of partnerships with Waymo. I'm a Tesla Bulls. I believe Tesla will replace Waymo when it's all said and done. But Uber has been a really good stock. I remember I was really bullish on Uber back at 40. Wish I would have longed it. I didn't. And it had a really generational run here, right? Over 100. So I would like to see Uber come down a little bit, honestly. Come down to the weekly, say 66. Let's go on the daily and see what it's at. Yeah, so you have a nice little death cross here on the daily and a well-defined downtrend now here. Um, let's see if earnings could pop it, but you have a downtrend, right? This is very definitive here that the downtrend is in. So we'll see if earnings could pop it out of this downtrend, or will it continue to have it come down to this trend here. I would like to see Uber come and retest to 60. I would put an alert at 66, 67. If earnings could drop it down to 66, 67, I might be a buyer of some shares or some leaps here because I believe Uber will figure it out. They're well integrated in in the infrastructure of autonomous and ride sharing, and they have a lot of different offerings. So I think the leadership there will figure out how to pivot and put themselves in a pole position to capitalize on this EV autonomous vehicle expansion. So 66 would be nice. Uber would not one of the ones I'm going to play into earnings. But it also to the upside, it could see a pop back over 85 as well. Um, Lilly and Novo also report Wednesday before the bell. But like I said, I'm gonna do a separate series with all healthcare stocks that I'm watching. So I'm gonna save those for that video as well. The big day on Wednesday is Google. Now, Google is a very interesting company. I've been doing a lot of research on Google over the weekend, and I think Google is going to have a meta type year. Now, would I like Google to sell off on earnings? Absolutely, because I think what Google is working on, I don't know if you guys have saw the Gemini, but the new Project Genie, you can now create your own virtual reality video game and from AI, just putting in prompts. It's pretty insane, which is why all the video game stocks fell off on Friday with that news because I mean Roblox tanked, TTW tanked, A was APP tanked, U tanked, all because Google came out with that project. Now, it can't do everything that those game companies can, but the fact that you can do what it can do, I'll have to probably put like a little section or a separate video together about Google's release of Genie. When I do, I'll post it. But Yeah, Google's having a lot of success when it comes to Gemini. Gemini and why Apple chose them makes a lot of sense. Google's doing some really big things. I wish we would have longed it here when I first called it out in the 140s. I remember I made a video about it this time last year. I said, Google, we should be buying it, and I didn't long it long enough, and sure enough, that was the that was the low. Makes me sick. But if Google has some decent earnings, I can see even going higher. It's been in a nice uptrend. But if they don't meet the guidance, and this is what I'm secretly hoping for, only for the reasons, the selfish reasons that I could buy more, is that if they do not guide to the upside or meet the street's expectation, the market could start saying, well, we already priced in this, and it'll start gapping down, right? So on the daily, we have a few gaps that we need to pay attention to. We have this gap right here, right? This is catastrophic. This is a Microsoft type sell-off. I don't see that happening. But you see these other gaps we filled, right? We filled that gap, we filled that gap, we filled that gap. So it's been a healthy move up. This is really the only gap that it hasn't filled on the chart. And I don't expect that to happen, right? I don't expect them to miss that badly. But if you want to put in some fibs here on the charts, we can kind of see what levels we're working with. Um, this will also be a very interesting level here at basically 300, the psych level 295. We had a nice little dip and fill of gappage here. So if the earnings could bring this back down to the 23.6, I would buy it heavily. Or if it could just bring us back down to the 50, which is at 315, I would buy it as well. There's no situation in Google that if it sells, I wouldn't be a buyer. I really think they've figured out when it's come to how to integrate AI into everyday use cases. Um, and I really like what they're doing moving forward. So is it overextended into earnings? Yes. I am personally in some 350 calls. I would probably add my puts if we get any type of opportunity to do so into Wednesday. I would probably add the puts and swing it. But it is very extended. On the weekly, we're sitting here at 80 RSI, but look, it's been sitting here since September. So remember when we said just because the RSI is elevated doesn't mean that it's immediate short. It just means that bullish momentum is in the stock and it's been in the stock for a very long time, right? It's been in the stock for about 4 months. It's the only Mag 7 stock that hasn't lost um, this year. All the other Mag 7s are like a percentages below their all-time highs. Google just continues to create new ones. So very, very interested to see how earnings reacts with Google. I like Google. I think you stay long, and I think any type of weakness, you buy it. But from a pure trade perspective, if you want to add you some 320 puts on any type of long position you have, I think that's always smart to hedge yourself into earnings as well. But I really think that if we have the year, I think we're going to have bearing no disruptions geopolitically or domestically. I think Google is a $400 stock by the end of this year. So stay long on Google, buy dips on Google. I think Google has figured it out. Um, I would be very surprised if they miss, and if they do miss, it'll be a buying opportunity for me. ARM Holdings don't really trade this one a lot, but it's a popular um, play as well. I don't really like this chart. I'm on the monthly. Let me go down to the weekly. But yeah, right here on the weekly is sitting at the 200. If you wanted to come in and maybe take a shot, since it's down here at the 200, it's well off its highs, you could. But it's not one of my favorite charts to play are my favorite companies. A lot of people might try to, use ARM as a Micron 2.0, so they may try to start pumping it, but it's right back here to the 618. So this makes sense too if you want to come in and maybe grab you some 120 calls. I'm not sure what the spreads are, but ARM would be one of those that you would just close your eyes and shoot in the dark if you just kind of want to play a gamble. ARM would be that one. But as you can see over the last since it went public, It's been trading in this range, right? This 100 to 180 range. So we'd like to see it get out of that off of earnings and possibly put in a double bottom here, right? Double bottom off the 618 and then head back up to 135-ish, right? So you would probably come in and buy calls first. Hopefully it runs into Wednesday, then you would add your put side to it. So 135 puts, excuse me, 135 calls. And then if it gets back to the 50, if it bounces off of the 618, then you go 100 puts, right, on ARM. Another one that's going to be talked about heavily is Qualcomm. Oh, excuse me, that is not the ticker. But Qualcomm here, haven't charted this in a while, so it's been selling off. There's a lot of behind Qualcomm. I remember there was like some debt issues or bankruptcy fears, whatever it might be. So this would be a big earnings for them to kind of settle some of those fears, and maybe it's oversold enough to where people can feel comfortable with coming back in. Because this was a very big player last year in the AI space and the chips and the memory, all that stuff. Um, and it ran significantly, right? So it's from the 2022 lows all the way up to 20s. And now we're coming right back down here where you have the 200 and the 618 identical lining up. This is actually pretty bullish if it can come down here and hold this 618. Um, Earnings could be the catalyst it needs to recover. So I would look for 145 to buy. If it can get down to 145 before earnings, you could take some risks there. Probably go right at the money 150 calls or just buy shares and write it into the earnings print. But I know there's a lot of FUD around Qualcomm and their balance sheet. So it's going to be big detail to what their guidance is and a lot of questions from analysts, I'm sure, about what caused this big sell-off, right? And have they figured out how to fix that? Because it was over half of the stock value got cut in half, right? So Qualcomm definitely on watch. I would be conservative. I wouldn't go too much on this, but it may be worth taking a shot if you can get it at 145. If you can get it here, I would feel comfortable with taking a shot to see how it goes. Um, you've got Snap, you got Elf. Those are popular plays. So let's just take a look at Snap. I know a lot of people like to trade Snap. Why? I don't know. It's one of the worst stocks of all time. But it's a fan favorite. I used to use it all the time. When my boys were young, they used to like doing the funny faces and playing on the filters, but now we don't ever use Snap, right? This chart is ugly. I don't even know what else you want me to want to look at here, but I don't know if they can figure it out. I mean, there's a very defined level of support here on the chart. More, you definitely play this with shares, right? Please don't load up on options because they will go to zero if it doesn't move and you won't have no one to buy them from you. So you load up on shares and you hope for the best. You hope for maybe $8 pop, right? You get back to 850. And then if you have a whole bunch of shares at 600, you can make a couple $100, right? But this could go to $2 if the earnings is not well. So um, be careful on Snap, right? Be careful um, playing that. But if it can hold this trend, it can come back up here, maybe pop back to 13. Um, I don't know. I don't see why you play it, but there's some that love Snap. But yeah, be careful. It would be a share only play for me. Um, let's move on. After close on Thursday, there's a really big day as well. We have Amazon, the giant, the pioneer. Shoot, as much as my wife buys Amazon, we should be a part owner, to be honest with you. But Amazon looks interesting here on the chart. I'm on the weekly. It's been holding the 200 on the down. It's in a very defined uptrend as well. It peaked out at 258 last week. I want to say was this last week. No, this was in November. Sorry. Um, Interesting weekly candle here as well. The whole market on Friday was a lot of chaos. But I like Amazon. I think they're doing a lot of really good things in the space of AI. I think they're doing really cool stuff in healthcare as well. Adding Amazon Pharmacy is awesome. They partnered with Novo to provide the GLP pills to the front door. So I'm sure it's going to add a lot of different subscriptions as well. They've got their Prime videos, they've got their NBA partnerships, they've got a lot of things going for them positive. I know their cloud's going to be a huge focal point going into the print. So we want to see if they can continue to grow there. You have a nice little wedge here setting up. Usually these types of wedges produce downside or it can be an ascending triangle. So we just have to wait and see what the print is. But I would play this very conservatively. It's ran a lot, and Amazon is a slow mover. It takes time for it to get going. But if it comes to the bottom side of this trend, if it breaks to the downside, then I would definitely expect it to come back down to retest 200. Um, from a psych level. Or let's see, we have, yeah, 198, 200. Yep, I figured that's where the 618 was. So right down here in this pocket, if it doesn't make a new all-time high prior to the print, then you would look for this zone here as your underside protection. And then if it does break out, then Amazon should see 260, 265, and you can kind of take this price range. Hold on, let's see. If you want to take all of this off to find where it could go to the upside, you've got about 6 months of data here where you can get some better price to the upside as well. So you see it can get up to, I got 285 on my chart for the extension, right? So definitely like 260, 250. I wouldn't play any type of outside the money strikes to where it hasn't been before. So you can put your calls right at 260 or 250 since it's been there before. And then hopefully any of the excess pop, you'll be in the money as well. So if you want to play this into earnings, I believe I think Alex said he's in some leap contracts on Amazon. I'm not sure. I had to double check that. But yeah, 240, 250, 260 on the upside. I would do no later or no sooner than February 20th. March 20th is probably the sweet spot. And then you're looking at 220, 215, 210 puts to the downside, February 20th as well. Now, one of the charts I've been asked to chart a lot is Irene. I gotta do a little bit more research about what Irene does, but I know they're very popular in the AI space. And the chart looks very interesting as well. You see that I've charted a couple times. Recently, it just rejected the 618 at 60, and it's holding the 10 here on my weekly chart around $49, $50 here. So I think it's cheap enough for you to buy shares of this, but if you wanted to buy contracts, you could. I would go keep it very tight. I would do $50 puts on the downside, $60 calls on the upside. I would give yourself more time on the upside. So I would go March 20th on the calls, and then February 2020 excuse me, 220 on the put side. So you're kind of you're leveraging your account for a longer term uptrend, but then you can capture some of the shorter term selling if we have a sell off in the market, right? So this zone here is where you want to go to the upside, and this zone here is where you want to see to the downside if you're playing iRing. So another one that's going to be very popular or man, this one's going to be very interesting. So Bitcoin hit another low this past weekend. I took a chance and bought some yesterday. I believe Bitcoin is going to continue to fall. I think it's going to go all the way down to this weekly 200, which is right at 68,000. And worst case scenario, if it breaks this downtrend here, it can get all the way down to 56, 57, right? So if you come down to where we were before we had that breakout bear market 2022, and you put on your fibs here, and Bitcoin and crypto follows fibs almost identical, right? So you have your 50% fib here set at 70K, which is right here at 20. Most of the time, there's going to be an impulse candle that takes you right to that 200. So 68K would be the sweet spot. But if it falls through 68K, don't be surprised. Do not be surprised if you see 57, 58 on Bitcoin, right? It would make sense. And I would hope we would do this quickly, right? Because I think, that once we come down here, you would see a lot of people put some risk on. The weekly RSI is pretty much right back down to the bottom. The MACD tried to cross bullish, but this most recent event in gold, silver, commodities, the Fed's new Fed appointment on Friday completely killed the entire momentum. And you can see on the chart here, now you have this very funky, but it played out head and shoulders, right? So there's no way for you to kind of ignore this now. I mean, it's pretty obvious where it played out. And that's why I always tell people the head and shoulder doesn't have to be perfectly symmetrical, right? It could be out of whack, but it could be still be there. So now we have these zones, right, where we would like to see Bitcoin hold for the overall bullish trend of Bitcoin. You want to see this hold. If this breaks, then we have some structural damage we need to talk about. But very similar to what happened back here, right? You had this wonky kind of break where it tried to recover and it fell down, created new lows. Same here, right? This funky left side, it tried to break and it failed. This is very similar to this, right? So these two time frames on Bitcoin right here and right here are very similar time frames. So you can see when that happened, it created several lows that went even below the 200, right? But this was different times. This is where inflation was running rampant, interest rates were high, bear market was all around. Could we be repeating that? I don't think so. I think we're going to have some more interest rate cuts. I think inflation is going to be just normalized at 3. And I think we're gonna unless, like I said, this could change by the time I finish this video, a tweet can come out and all this could change. But just from looking at the chart right now, Bitcoin is looking like it's going to try to come down and hit 68. But from here, you're in the window where you should start adding, right? And everyone's like, oh man, you started adding too early. Okay, well, when are you supposed to add, right? You're supposed to always wait. You know how flexible or how violent these moves happen in crypto and stocks in general. That's why I'm always, when people try to harp on, oh man, when are you adding? When are you adding? Are you adding too high? Oh, it's still going down. Okay, well, if your goal is longer than a day, then when are you supposed to start? It's already down, what, over half from its high, right? So yeah, if you add it up here, then yeah, you added way too soon. But I haven't touched crypto at all. This is my first purchase in crypto. And I think I like it down here than I like it up here, right? So for all those hawks that always talk to you about, oh, you're adding too early, oh, blah, 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 ignore them because they're going to be the same people who are going to say in a couple of weeks, oh man, I wish I would have bought that dip, right? So you have to just ignore them, trust your chart, and don't always shoot your first load on your first ad. Like I just put $500 in, right? And set up a scheduled weekly purchase of $100, right? You build your position over time. You don't shoot your full load on the first dip. You don't shoot your full load on the first recovery. No, you manage your buys, you manage your portfolio, you manage your risk, and you buy when the opportunity presents itself. So that's what we're doing here on Bitcoin. And on Bitcoin, what that happens on Bitcoin will also translate into what MSTR does. Now, MSTR has been in free fall. There's a lot of people that are accusing Michael Saylor of being a scam artist, whatever, whatever. Him and Tom Lee, MSTR, BMNR are following the same thing. But right now, MSCR is leveraged to Bitcoin. So suspect MSCR unless Bitcoin has a big pop tonight on Sundays, which sometimes it does. This is going to open up bad on Monday. This is going to open up really bad. Maybe under 130, right? But if you're into MSTR like that, then this would be a buying opportunity for you. I personally am not. I used to be. I played it here. I played this breakout, right? And we made some good money on MSTR, and then I never touched it again. And I started trying to play Ethereum. I rode that to 5,000, and then I got out. Um, Dibbled and dabbled in it underneath 4K. There's some quick trade vehicles, but I am people who know I'm not a crypto enthusiast. I think it's better to buy dips in Mag 7, but when things sell off this violently, it catches my eye and you have to pay attention to that. So right now it's hovering right between the 618 and the 786. So if you are a believer in crypto, um this would be the time for you to come in and buy some leaps, right? MSTR, you can buy leap $200 leaps and just forget about it. That'll be your crypto exposure. If you're that bullish on crypto, this is where you would buy your leaps when the fear is the highest and the panic is the highest and it's over, it's trending everywhere. This is where you come in and you come in with a cool head, you pull up your charts and you buy your leaps, right? And you would buy it for this zone right here, right? And then you would short the dailies right now until MSCR can find a bottom. You let your leaps cook, you ignore them, you keep adding to them every other day, every other week, whatever. And then you would short the intraday movements until Bitcoin can find a bottom. You would just come in and you would play your EMAs. Every time it comes to an EMA that's been rejecting, you would short it. This is how you trade around your core position. And I think people don't understand that. And they like to accuse you of different things that's not true. You can do two things at the same time. You can have a long position while shorting around your core position. And this is how you keep your accounts from being destroyed, right? You have to be flexible to be able to do both sides. Anyways, that's what I'm seeing on MSTR. Um, so one of my favorites or house favorites is Roblox. Now, I touched on this earlier. Roblox is very popular in my house. My kids love Roblox to death. But the reason why it sold off like it did is because of Google's introduction of their Gemini, excuse me, of their Genie 3, which allows you to create virtual worlds just by inputting a prompt. So that had a lot of these Roblox games um, come in question. Will they survive? I'll tell you right now, my kids and their friends are all on Roblox. It would take a lot to get them to go off of Roblox. So I kind of like Roblox in here into the print. I think it's sold off a lot, and now it's right below the 618. I think the CEO is going to address a lot of those concerns. And even Gemini said it itself is that it's not capable of doing a lot of things Roblox can do yet. Doesn't mean it will, but it for right now, I think the selling is a little bit overdone. And now we played it off of this weekly 200 to start the year. We caught this big candle here and we got out. So I'm actually looking to maybe Roblox. My kids have it in their accounts. And I might add some shares for them as well. But I kind of like it. I kind of like it here. If it sells off more tomorrow, they don't report till Thursday. I kind of like it. I might make an ad here, right? So it's right here on this trend, right below it. So if it pops back over this, I might get some leaps on Roblox, honestly, or just some more shares. But I don't think it's over for Roblox yet. I think this is very well entrenched inside the younger kids um economy. And my kids light up when you get them their reward cards are Roblox gift cards. It makes their whole day. So until Gemini can do that, I say we use this deep seek moment for gaming and we come in and we buy some of these names. And I think Roblox is one of the ones that we do that for. Reddit also reports on Thursday, another crowd favorite. Reddit had some wild swings, and I haven't traded it before, but there's a very defined M here on the chart. You see it, right? The M, right down to the 50 on the weekly. So it's right at a sweet spot for earnings. I like playing 50 retests because it gives me a pivot point to layer calls or puts on it. Now, I'm already playing Google this week. I've made Google and Roblox, I think my top two that I'm thinking of playing. Um, Lily also reports this week too. I like Lily, and I'll go over that here in a second. But right here, we're back to the 50, right? So I like the 50-50. I like the coin toss. The coin toss fibs and EMAs play well for my strategy when it comes to the seesaw. So you can really use your fibs to pick your strike right now. You can go 205 to the upside, and you can go 150, 160 to the downside. This is a very perfect spot for Reddit to be for earnings play. So if you wanted to get into Reddit, and you have the capital to do so. I'm sure the IVs are going to be crazy because Reddit is a heavy retail traded stock. But you can go 205 here. This would be your upside target, and I would keep it tight. You could do February 20th. Don't spend a whole bunch of capital on this, and you can probably go even shorter since they report on Thursday. You could probably go February 13th. I think that's the biweekly contract. And this would be where you would put your put, right? You would put it right here. So 155 to 160 would be your downside, and 200 to 205 would be your upside. And it's right here in the middle at this 50% fib, which is the sweet spot when it comes to earnings seesaw calculations. I like that on the chart. So Reddit, keep it in mind. There's an M on there that could drill right down to the 618, or this 50 can become support, and it can bounce right off of here back into 205. So I love where Reddit is coming in to earnings. Now, the last one I want to talk about here is um, a firm got a lot of good looks when the capping of the credit cards came in because if you can't get credit, how are you going to be able to buy things on terms? And Affirm is the one that can do that for you. So it has a nice little trend channel here. It sold off with the overall market last week as everything did. But it sold right down to the weekly 200, basically at 56. I think this is a really nice spot in the channel. They should report really good earnings because this is from Q4, so holiday season. A lot of people were buying their gifts and holiday travel on Affirm. So I'm very curious to see what their numbers will be, as well as their guidance and any comments that they make on this credit card cap. Could be a steal here, right? Could be an opportunity to buy. I don't know if you would buy calls on this. I haven't checked the spreads, but could be a nice share add position. And for the downside, if it doesn't go as planned, it's even right here back to the 618 of this channel, right? So I like Affirm. I like Affirm going in their earnings. I think they should report well, especially holiday season. But we need to make sure it's not seasonality. We need to see if their guidance can repeat this. Like, is Q4 their biggest quarter and then they're going to be trash the rest of the year? If so, the market could say, well, we've already priced in their growth. Or can they say, hey, we're going to continue to do this on a quarter by quarter basis? If so, then I think they can see north of 70. So you would come into the week, you would buy your calls, and then you would wait for a pop, wait for any green day, and then you would buy your puts. You would go right back at 55 here in the puts. But you would buy your calls first, right? You buy your calls first because it looks like it's red. And I haven't seen, well, obviously, futures aren't open yet, so we can't really see what we don't know. But if it continues to sell, you would buy your calls first, $70 calls, February 20th, March 20th, whichever your capital can allow. Wait for a green day, Tuesday, Wednesday, and then you would buy your put, your $55, $60 put to the downside. But I like Affirm. I think Affirm is going to be nice. Now with gold reporting, I did want to add this. I know this is a gold miner. Um, so they report this is Barrick. They report Thursday as well. I'm sure they're going to report astronomical numbers because gold has been a generational run. As you can see, it's been following gold. Obviously, it had a horrible day on Friday, but I'm curious to see if what their forecast is going to be. I'm not going to trade it, but for those gold lovers, I wanted to include it so that way you guys make sure that way you know that gold reports this week. So keep that on your radar as well. It come down here to this weekly at 47, and then go right back up, make a new all-time high at 60, depending on how gold acts this week. So keep that on your radar as well. All right, so I said at the beginning of the video, I wanted to talk about the healthcare segment. So we have four of the more popular healthcare stocks that are going to be reporting this week. On Tuesday, we have Merck, which is MRK, and we also have Pfizer, which is PFE, and we also have Lilly and Novo. Now, out of all of these, you guys know we have been playing NVO, we have been playing Lilly. I think Novo has a chance to separate themselves because of how early they were able to go to market with their pill for weight loss. It released this past month, and in the first week, they had 20,000 orders for shipment from Amazon. So I think Novo needs to be on our radar as the top healthcare stock for this week. It has risen from 43, which was the monthly 200, right? The MACD is now curling, the RSI is now curling, and it still has a lot of momentum to get back up to the 70s, right? So this is one of the ones that I want to make sure people don't forget about, because we need to see what their guidance is going to be. We need to see the company, the CEO be very enthusiastic about their purchases and their open book of orders for the pills. We need to see that follow through and translate. So if that can do that, then I can see Novo popping over popping over 70 um, after the earnings call. But if they fail to do that, do not be surprised if Novo goes right back to 40, right? Because this is their big opportunity to take market share away from who I call the NVIDIA of healthcare, is Eli Lilly. So you see, Lilly had a chance to be the first to market with the pill. They pushed their pill back a couple of weeks. I think it's still coming this quarter, but that has caused some hesitation and buying because people want to make sure it gets approved. But you see, Lilly is putting in a nice support here on the daily 50. If that earnings comes in with projected guidance of the pill, you can definitely see Lilly back over 1100. Or if they don't report that they have a future inside track to the GLP-1 pill, then don't be surprised if Lilly comes back down to maybe the mid 900s. So I think from a cost evaluation, right? So here, right? So it's holding this 23.6, right? I would love to see Lilly hold 1,000 into earnings. I might be a player of some far out the money, even $1,200 calls, right? If Lilly has a really good earnings, $1,200 is doable. But if they don't, it can sell off and sell off fast. So I think if you're looking for a cost appreciation, if you're looking for a cost effective trade, I think Novo is your better trade because I think they provide um, better instant return without, risking your entire account. But I think long term, Lilly is going to end up being the king of this thing. I think they have the resources and the credibility to actually take over. They're just a little bit late to entry when it comes to the pill, right? So you have Novo, you have Lilly, both report same day, um, Wednesday morning. I would be a buyer of Novo just because they're more affordable and they have some more recent news and excitement around their pill. But any weakness on Lilly, I would also be a buyer of this as well. And I would go further out the money. I would go $1,200, $1,100. Lilly can move that fast, that quick. Trust me. But Novo over 65 looks good. You can put your leaps back on into earnings with some short-term puts, and I think that's a good trade as well. But Lilly and Novo, definitely two of my favorite healthcare stocks. I think you should play them. All right, so it looks like we are at the end. We are going to be making sure we watch Spy, excuse me, Spy this week. Big week for Spy. Um, Google will definitely help move SPY. Amazon definitely help move SPY. Geopolitical government shutdown. Hopefully it's over by Tuesday. If so, we could continue our track up to 7,000. We have jobs on Friday as well. So uh should be good. Should be good. But those are the stocks I'm watching. Hope you guys have a safe week. Take care and let's get some money.